Hi guys, I'm Karunya Rao and in Ideas for Profit, all eyes on HG Infra. The construction space is all set to witness strong growth in the medium term, driven by government's focus on infra, which is a key driver of economic growth and job creation. Government's huge investments worth 111 lakh crores in creating national infra pipeline over the next 5 years is set to create tremendous opportunities for infra players. While the opportunities are huge, players with strong balance sheets and financial discipline such as HG Infra would be able to take full advantage of the infra boom. Financial prudence is an important aspect for construction business and a key factor for ensuring growth as well as valuation. HG has evolved from being a subcontractor in 2013 to a full-fledged contractor. It's built a strong team and an asset base and is now qualified to bid for large projects worth 3,000 crores independently. Furthermore, HG Infra has entered newer states like Maharashtra, Uttar Pradesh, Andhra Pradesh and Telangana in the last 5 years, thereby reducing concentration risk quite significantly. It has grown at an industry-leading CAGR of 28% over FY14 to 21 and has demonstrated financial discipline by avoiding over-leveraging and having a control on working capital. Since our recommendation in Feb 2021, the stock is up a whopping 116%, hugely outperforming the benchmark Nifty 50 index. Entry into new segments coupled with continued financial prudence is something that will push HG Infra to newer heights. HG said project execution, which was impacted due to the second wave of COVID-19 in April-May period, is now regaining momentum. Execution has normalized to pre-COVID levels and the company has guided for robust growth in Q2 FY22. With the monsoon receding, the company expects execution to be stronger in the second half and has guided for around 30% top-line growth in the current fiscal. The company has received 2 new orders last week. First one from Rajasthan State Government for a road hybrid annuity model project worth 450 crores. Second, it has received 2 HAM projects from NHAI worth 1400 crores. With the new orders, the company's current order book stands at about 8,700 crores, providing strong growth visibility going forward. HG Infra currently derives its entire revenue from the road construction segment, but it's diversifying into new areas which would de-risk its profile and be a significant re-rating factor. HG is looking at newer areas, the likes of water, railways and airport segments. It is targeting about 10% of the order book from new segments in the current fiscal year, which would be scaled up to 20 to 25% over the medium term. HG Infra would undertake pipeline laying for water projects, track laying for railways and building airport runways. The qualification criteria for a construction player in railways and airports is similar to that of the road segment and hence HG will not face any issues in bidding process. For water segment, HG will have to undertake work in joint ventures as it does not have a pre-qualification for water projects. Also, it can utilize its existing assets as well as manpower for new segments and will not require major capex to enter into these new areas. HG Infra remains focused on maintaining its financials and a robust balance sheet as it looks to grow the revenue trajectory. For the existing road segment, the company targets EPC projects where IRR is about 12 to 13%, whereas for HAM projects, it works with IRR of about 18 to 20%, giving a blend IRR of 16 to 17%. Similarly, for newer segments, the company will undertake projects which fetch margins of 14 to 15% and would not undertake margin dilutive projects. While new areas have slightly higher working capital requirements compared to road segment, HG said it would maintain the overall net working capital requirement of 50 to 65 days. Also, it aims to keep a robust balance sheet and has stated that the debt to equity ratio will be kept at 1x and it will not leverage beyond the equity value in the balance sheet. The company also plans to sell the HAM projects once the construction is complete so that the capital is available for undertaking new projects. HG Infra is among the few stocks in the construction space with a robust balance sheet. It has a debt to equity of about 0.7x in FY21 and a healthy working capital management of about 48 days as of March 21. Pickup in execution, healthy order book and diversification into new areas will continue to drive growth as well as valuation multiples. At the current market price, the stock is trading at 12x of its FY23 earnings, which is comparable or rather at a discount to other quality players in the listed space. HG Infra continues to remain our conviction bet in the construction space and therefore we advise investors to add the stock to their portfolio.